Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Fed Day, March 19th, 2025. We're getting on to 6:30 p.m. daylight savings time. So you're getting a rally in the stock market. Metal markets are up across the board. The dollar isn't open, but currencies are wobbling. They're not quite certain what to make out of everything. But before I get into other parts of the market, you're going to get the Philly Fed Regional Business Activity Index at 7:30. Existing home sales for February will come out in the morning at 9. That's existing home sales. The EIA natural gas report will come out at 9:30 a.m. And this is the highlights, as I saw them, out of the Federal Reserve announcement. I'm not going to read everyone. Why do that? Just hit pause, and you can read them if you want, and now you get to see what it is. So, what do I think this all means? In essence, what I think the Fed said is that slow U.S. economic growth and higher inflation is here for a bit due to the tariffs. And the Fed has to change gears, and instead of lowering interest rates when inflation falls, they're going to view inflation coming off tariffs as potentially a transitory period via artificial tariffs, which is exactly what that is. So it's a pivot. The Fed may cut interest rates now to spur on the economy, not because inflation isn't falling. In the past, if inflation fell, they were looking to lower rates to get away from restrictive. Now they're changing games from that to, I think, moving to a pattern of supporting the economy. In other words, we're getting a Fed put. And I think that's so important to understand in the market. Could this change quickly? Yeah. Once the Fed has an understanding, and we have an understanding of what the Trump tariffs are, what they hit, how much they are, we'll be able to dissect it and see, is it good, is it bad, what's it going to do? Are other countries going to retaliate, or do they cave in and everybody reaches an agreement quickly and the tariff doesn't go on? There's too much. And the Fed said, it's a time of great uncertainty. If they're saying it, how come you think you know what's going on? All right. I think they're brighter than most of us. Maybe not you, but certainly me. And that's how I'm going to approach the market. So when I look at all that's going on, I look at the stock market on this. I think longer term, this is all friendly, the stock market, but not now. I think the tariffs, if you will, cause different problems. And I think that on these rallies, you're going to see traders actually coming out of stocks. And remember, the index itself is made up of individual stocks. And I think you're going to get a liquidation phase. I think it's all systems still go on inflation. I think the dollar is probably going to get sold on this news. I mean, I don't see this as bullish for the dollar. I see the bonds and the notes probably overall being friendly to this. I see no impact at all on it, on the grain market at this point in time. So when we look at the S&P, I think you'd agree with me, we're well under the 18-day average of closes, and you've got to bounce for the week. This includes tonight's trade. You're not quite up a percentage point, the full point. The market has had a top form. It's come down, and you're getting a bounce, all right? It's not a runaway. It's a bounce in the market. I think it'll be contained in the 57.47 level if it can make it to that level. Another level that it could get to is the 200, but I think the first one is that 57.47, if it can get that high. While the trend is up on the swing line, to me, this is a bear market rally because when you're under the 18-day average, I have an automatic downside bias. That's the filter on the swing line. When we take a look at where the market's at with Bollinger Bands, you can see they're all the way down here on the bottom and coming down on the top. Okay. And last but not least, you lost the bearish embedded reading, which often, and you heard me say this yesterday, leads to price and the 18-day average making a run at each other. And that's what I think is going on. It is the same story in the NASDAQ. I would not be surprised to see the market try that. But I do think that buying these rallies could be a problem for you. In the March Dow Jones, the micro, I can see a big resistance at the combination of the 200-day average in gray and the 18-day average of closes. And you're there in the Russell. Now, the Russell was down the most, so it's the first one to get the bounce off the news. And this market might try the upside, but I have my doubts. Why is this market okay right now? What impacts Russell stocks more than anything? High interest rates, because these are not your top tier companies. They're public companies, don't get me wrong. And there are some in there that are obviously good. I'm making a generality. And if interest rates fall, and they're down to they were down to 4.25 tonight. I'm going by my memory here for the 10-year. Well, that's going to help. And if the front months come down, that even helps more. In other words, how the curve yield's going to act. That's why I think this market rallied. I think it has the Fed put behind it that they're going to lower interest rates in a soft economy, which helps. The negative is the word soft economy. Will these companies be able to sell enough to overcome that? That I don't know. DAX. I said I'd cover the DAX, and I put it up. I'm going to get rid of this blue line that I got there. It's a simple thing, but I wanted to get it up for you. I had it on the weekly chart, and I noticed today, I said, why didn't I have it on the dailies? This is outperforming, obviously, U.S. stocks. The word exceptionalism in the U.S. ended. It ended mid-February, early February, when the Dow made that triple top that I showed you earlier, and the S&P and all those other numbers, and the dollar plunged. And this is all part and parcel of what our president, Trump, is trying to get done. He's trying to break interest rates, and I think the Fed today joined his party. He's trying to break the value of the dollar. I think the economy's doing that. He's trying to get rid of the unfairness in his mind that the U.S. has with deficits with so many countries. I understand that. And as he's accomplishing all this, you're getting other markets around the world moving. The DAX is moving because he told NATO, very simply, if he's president and you don't contribute X amount to your defense, that's it. And then he came in and he cut off everything to Ukraine. They got the message. Monumental event happened. Germany's changing its constitution in order to spend more on defense, and they're the economic engine. So you're seeing defense companies there go bananas to the upside. Is money's going to be thrown at them left and right. This was a seismic event. This is not it's a blip in the market. It's whole different. And this market has been coming on. And if you'll notice, it came alive when Trump came to office. Do you think this is not Trump in office? This is Trump in office. And this is what happened at that point. You don't have to agree with me, but it's the reality of the situation. In the 10-year notes, I can make an argument that the market is just condensing, going sideways right now, and the same in the 2-year. The more this happens, the more bullish I become, because the Fed has said it has the markets back. It sees the economy slowing down. It gave us projections 3 years out. They are weakening. And if they're weakening, the Fed's job is to make sure full employment, inflation under control, basically a strong economy. You don't do that with restrictive interest rates. In the dollar, this is part and parcel of that. The lower the dollar goes, the better we are for our trade. The worse we are for buying foreign goods, which is what Trump wants to see. He wants to see those goods expensive so that you have to produce them in America. It's not a very difficult, complicated part to understand what he's after. That keeps the euro bid, and the question is, how do they view all this? Do they continue to cut interest rates? Are they happy with where they're at? Many of the banks are taking right now the high road and saying, let's see what the tariffs do, and then we'll make our decision. We have the Bank of England coming up with their rate decision right now. What are they going to do? Are they going to say, let's take a look? I think everybody should. And they can always make their maneuver right after they know where they're at with these tariffs. That's what I think is going on, and the Bank of Japan did that today. In the British pound, notice how flat you're going. I'm giving you the key that I think is what's happening. In Bitcoin, this is the first move today, for the Thursday trade, where we're over the 18-day average. Will it hold? Remember when we were here at the 200-day? I said I think this market is now fighting its battle, and I think it'll go back to the 18-day average, and that's where we'll find out what it does. I don't think sticking it out tonight over that tells me to get super bullish. But if the NASDAQ goes up, which it is, this market tends to rally with it. Lay one chart over the other. You'll see what I'm saying. In the Brent and the oil, I just can't get overly bullish on the oil. Fundamentally, the president, the Fed, everybody wants to lower oil prices. Not the Fed so much, but the Fed, if it's saying lower U.S. growth, that's a problem. But with all the tariffs, do you think that helps growth everywhere? I have my own thought on that, and I don't think so. The fact that OPEC is about to throw more oil on the market in order to teach Kazakhstan a lesson for not meeting their quotas. Okay, that can change, obviously, if Kazakhstan stops and says they're going to refrain from everything. But I think the more I read about that, the more I understood what went on. Kazakhstan replaced Russia. They're overproducing. Remember the war that Russia and OPEC got into? And it drove prices. Do you remember that you had to pay money? Actually, oil went to zero. You find that hard to believe. It's not hard to believe. It went to zero. You had to pay to store it on a ship if you could get one. And then what do? Nobody wanted the oil. And then it came back. Go look at your charts and take a look at what went on at that time. So you're looking at a craziness in the market. I can't get bullish that right now. So I see that as a problem. I see WTI as a problem. I see heating oil as a problem the same way. And natural gas, it's that funny time of year where one day I need heat in the house, next day I need air conditioning in the house. I swear to you, that's how it's going back and forth. We just had another tornado warning in Chicago tonight. So a big storm just moved out right away, but terrible. And that's what happens in March. Remember? What's the thing? Comes in like a lion, goes out like a lamb. I think as a kid. So you put that together. You try to come up with the game plan, and that's what I'm here for. Remember to go to our website, iraepstein.com. So simple. Free offers. Sign up for my research. I think you will see. It's going to give you some ideas. And now I have an idea where I'm headed, and now I know what to do in a special report. I'll have one done by Friday at the latest, now a video report for you, and I'm Ira Epstein.